While 2020 hasn't really been the best year for any of us, I have to admit, it has been a pretty good year for me starting a finance channel. Now, I'm sure you know, I don't really cover any news on my channel. It's not really a topic I like to dig into, but there's been a lot of changes and adjustments made to our economy, and it's given me a lot of information to be able to talk about very easily without having to dig deep for new topics and discussions. And if you're a nerd like me, you probably heard that Apple announced a stock split last week. But if you don't know about that, or if you're not aware of what a stock split is, today we're going to explain to you exactly what a stock split is, why Apple did it, and if it's an investment that you should put into your portfolio now that they've had this split. Hey everyone, and thanks for joining me today. My name's Matt, and as I mentioned in the intro, today we're going to explain stock splits, Apple stock split, and how that could affect your portfolio, or if now this is something you should be looking at for adding to your portfolio. But to start this off, I think we should all get on the same page here, so I want to start off by explaining what a stock split is. So a stock split is a very easy concept to follow along with, but admittedly I struggled very much with figuring out a way to define a stock split. So I'll read what Investopedia has and then I'll give an example. It says, a stock split is a corporate action in which a company divides its existing shares into multiple shares to boost the liquidity of the shares. That sounds like a whole bunch of nonsense and a whole bunch of jargon, so let me give you an example here. One second. Alright, so here, as you can see, I have $5. We'll say this $5 is the equivalent of one share of company A. When a stock split happens, or if a company announces a 5-for-1 stock split, basically what that means is we're going to take this $5 in one bill, and we're going to give you 5 $1 bills. So 1, 2, 3, 4, 5. Now that might not make sense there, but basically all it is now you have 5 $1 instead of one $5. You still have $5, but you just have more dollar bills than you had previously. So the share of your account or the value of your account doesn't change from this. The company doesn't earn any money from this. We'll get more into that later. But essentially that's all it is you now have more shares that are equal to what you had previously, but just less per share, I guess. Hopefully you've picked up on what I'm getting at here with what stock splits are. There's reverse stock splits. We won't really get into that. Basically, that's just the exact opposite. If a company does a 1-to-5 stock split, that means they're going to take this 5 $1 bills and give you one $5 bill. Now, the reason why companies do this is because they say it increases liquidity in the market. Again, more on that later. So there's a lot of misconceptions, though, when it comes to stock splits and what it actually does. So let me just say what a stock split does not mean happens. So when a stock split occurs, like what Apple just did, announcing their 4-for-1 stock, it doesn't mean that you own a larger position in Apple. The value of your overall position is going to remain the exact same. The corporation, or in this case Apple, that issues the split doesn't receive any money from doing the stock split. In case you don't know, the only time corporations actually raise money from stocks is when they're initially issued to the public markets. So you might occasionally have like Class A, B, C shares of stocks, and that's usually because they're at different offerings. Whole different topic though, but so the corporation makes no money from a stock split. You won't be receiving a larger dividend from this because you now have more shares. Your dividend payouts will be the exact same. And while the earnings per share will decrease a little bit as a result from a stock split, your PE ratios will not be the same. Your PE ratios will be the same. So again, when I do my watch list Wednesdays, that's a good example of why it's important to use multiple measurements and looking at stocks and comparing them, because things like a stock split, again, affects the earnings per share, but has no effect to the PE ratio. So that's just why we always look at multiple different measurements for analyzing stocks. So what does happen? Well, I kind of already said this, but essentially all it does is increase the liquidity in the market. Now, I'm going to take a little sidestep here and get off on a little tangent like I always do, but I'll be curious to see if stock splits become less and less prevalent in the market in the future, because now that we have the ability to have fractional shares with certain brokerage accounts, it kind of defeats the purpose of the stock split. You know, sometimes they would say that the stock split allows for new investors to step in that might not have, I cannot personally afford a share of Amazon right now. But if they did a stock split and brought Amazon shares down to $500 a share, then yeah, that could be something I can add to the portfolio. But now that we can buy fractional shares, and if I just have $500 to invest, at certain brokerages, there's nothing stopping me from just putting $500 into a share of stock or into a share of Amazon. Now, I'm not a big fan of fractional shares. That's a topic for a different day. But I just think it'll be interesting to watch over the years if stock splits almost become non-existent, or if maybe only reverse stock splits will happen, or how fractional shares will actually impact stock splits. Anyway, let's get back to the regular scheduled program here. So the next question you probably have been asking yourself is, does Apple have any benefit from doing this stock split? And in theory, the answer is no. I mean, yes, you can say that doing stock splits does increase your media coverage, which is going to get your name out there in the news and could be a way of getting like free PR for yourself. But at the end of the day, Apple has such large brand recognition already that they don't need the extra boost for people to know what Apple is. I mean, almost everybody has an iPhone these days. And, that's enough of those Apple logos floating around. I have the one right here. It's on my mouse. It's on my keyboard. So they don't really benefit from doing this stock split. Now, I have a theory, and it's a bit more technical than what I typically like to get into on my channel, and it's not really a topic I'll very heavily dive into. But my theory behind why they'll do stock splits like this is because stocks are known to have a resistance level. And basically what that means is, or a sweet spot. We'll call it a sweet spot. Because what that means is if a stock is trading at a very low dollar price, the share price is low, then some people might look at that as a weak stock. And that might not be one they want to add to the portfolio because it's just so low. And the same thing on the flip side. If the share price is very high, not every investor can get into it. And so they're going to kind of hang tight on it, which is going to impact trading volumes on that specific stock. And so there's kind of that sweet spot where people see that and it's like, hey, that's a good deal. That is something I can get interested in. And ultimately what happens from there is it's going to increase that trading volume, which in theory is going to raise their stock price up again, increasing their market price. And when you hit that resistance level, again, it's kind of that sweet spot where people are saying it's not going to go down anymore, but it has so much upside potential that this could be a good investment. And that's kind of my theory for why Apple does this, because they do it pretty frequently. Now, the last one happened in 2014, and this is actually when they did the last one, which is, 6 years ago now. I thought it was, anyway. I remember last time they did it, I was in college learning about finance, and I just thought their share price dropped, by, I think it was a 7-to-1 stock split or something, and so I just thought it dropped significantly. Then I learned about stock splits. And they've done it before. I think they did in 2005, and then they did in 2000, 1987. So Apple does this fairly frequently, and they still pay a dividend. So I think, in theory, they could be using these stock splits, again, as a way to keep driving up that share price over time, which, again, is going to give them a bigger market cap. My theory, could be wrong, could be right. I don't know that. That's just if you're asking yourself, why are they doing this? That's my thought process. So now, I think it's time for the moment of truth. Is Apple a buy? If you've been following my channel for a while now and have seen some of my videos, you probably know what I'm about to say. But if you're new here, I will suggest maybe subscribing at this point, because I don't really give this information out to anybody. I don't just pass it along freely to everybody I see. And there's not many other YouTubers out there that are giving away this kind of information. So listen carefully, and again, might want to subscribe because this information is one of a kind. And the answer to if Apple stock is a buy is it depends. They offer steady growth, they pay a dividend, they have a lot of stuff that's proprietary to them, and they keep a lot of stuff in-house. They have a great online presence as well as a brick and mortar presence as well. But at the end of the day, if you're thinking about this as an investment now because of the stock split, let me put it to you this way. It's the same investment that it was last week. It's the same investment that it was last month, and it's going to be the same investment that it'll be next month. If this is something that didn't fit in your portfolio previously, just because a stock split happened does not mean that it fits in your portfolio now. If you have too much exposure to tech companies, if you have a large stock exposure, need a bond or REIT exposure, any other reasons, if you already have, tech ETFs or blue chip ETFs or something like that, This stock split does not make it now a good investment. Again, it's the same investment, and if there was reasons why Apple didn't fit into your portfolio previously, those same reasons should still exist, other than price, which is kind of irrelevant because price can be determined so many different ways. That it's just, not worth putting into your portfolio if you didn't see a need for it previously. Now, that being said, if you did see a need for it previously, don't also think of this as you're getting it at a discount because of the stock split. Overall, the share price is just one measurement. But if you look at a share price compared to price earnings per shares, all those other ratio, weighted average cost of capital, free cash flows, their betas, all of that, it should be the same cost, if that makes sense. Probably will delete that whole section out. But, if it was something you were considering, again, just because the split happens does not make it a different opportunity than it was last week. So if it's something you're considering, sure, you'll pick up additional shares. But if you were going to put $5,000 into it, $5,000 is $5,000. The share price at this point is irrelevant towards the investment. So I hope that makes sense. I know I went down a few rabbit holes on that one, so I apologize. Hope I didn't lose anybody there. If you have any questions on this, if there's anything that I missed and you'd like for me to go over in more detail, please leave that in the comment section down below and I'll happily address any comments, or as always, I can always make a follow-up video to this just going into more detail on something I might have missed. If you did think this video was helpful and if you really like that one-of-a-kind information, I'd hope you give it a thumbs up. I already asked for you to subscribe, so I won't do that again. But with that said, we can go ahead and wrap the video up here. So thank you so much for taking the time out of your day to watch this video. You can be anywhere in the world and you're right here with me, and I really appreciate that. But I will let you go ahead and enjoy the rest of your day, and I'll see you next time.
This is lit.